Feeling lost in the sea of investment options? Wondering how to secure a reliable income while growing your wealth? You're not alone. The stock market can be intimidating, and finding a strategy that balances risk and reward is challenging. But what if there was a proven method to earn steady income and benefit from long-term growth? In this video, we'll delve into the world of dividend investing, a strategy endorsed by some of the greatest investors of all time. Stay with us to discover how dividend-paying stocks can provide a stable financial foundation and whether they should be a part of your investment portfolio. Curious? Let's get started. What are dividend investments? Dividend investments involve buying shares in companies that pay dividends, which are regular payments made to shareholders out of the company's profits. Dividends are typically paid quarterly and provide a way for investors to earn a consistent income stream in addition to any capital gains from the appreciation of the stock price. Why dividend investments are so attractive? Steady income stream. One of the most attractive features of dividend investments is the steady income they provide. For retirees or those seeking a regular income, dividend-paying stocks can be an excellent choice. These payments can help cover living expenses or be reinvested to purchase more shares, thereby compounding your returns over time. Do you know the only thing that gives me pleasure? It's to see my dividends coming in. John D. Rockefeller. Potential for long-term growth. Many dividend-paying companies are well-established and financially stable, often referred to as blue-chip stocks. These companies tend to have a history of stable earnings and prudent management, which can lead to long-term growth. While the primary appeal is the income, the potential for capital appreciation shouldn't be overlooked. In the long run, it's hard for a stock to earn a much better return than the business which underlies it earns. Warren Buffett. Types of dividend investments. Dividend aristocrats. Dividend aristocrats are companies that have consistently increased their dividends for at least 25 consecutive years. These companies are often leaders in their industries and have a strong track record of financial performance. Investing in dividend aristocrats can provide both reliability and growth potential. Real estate investment trusts, REITs. REITs are companies that own, operate, or finance income-producing real estate. They are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. REITs can be an excellent way to gain exposure to the real estate market while earning a steady income. High-yield dividend stocks. High-yield dividend stocks offer higher-than-average dividend yields, which can be appealing to income-focused investors. However, it's important to be cautious with high-yield stocks, as a high yield can sometimes indicate underlying financial difficulties or unsustainable payout ratios. Benefits of dividend investing. Compound interest. One of the most powerful benefits of dividend investing is the ability to reinvest dividends. By reinvesting your dividends to purchase additional shares, you can take advantage of compound interest, where your earnings generate even more earnings over time. Reduced volatility. Dividend-paying stocks tend to be less volatile than non-dividend-paying stocks. This is because companies that pay dividends are often more established and financially stable. The steady income from dividends can also help buffer against market downturns, providing a degree of stability to your portfolio. Tax advantages. In many countries, qualified dividends are taxed at a lower rate than ordinary income. This can make dividend investments more tax-efficient compared to other forms of income. However, it's important to understand the specific tax laws in your country and how they apply to your situation. Risks of dividend investing. Dividend cuts. One of the risks associated with dividend investing is the possibility of dividend cuts. If a company experiences financial difficulties, it may reduce or eliminate its dividend payments. This can not only affect your income stream, but also lead to a decline in the stock price. Interest rate risk. Dividend-paying stocks can be sensitive to changes in interest rates. When interest rates rise, fixed income investments like bonds become more attractive, which can lead to a decrease in demand for dividend stocks. This can result in lower stock prices and potentially lower yields. Inflation risk. While dividends can provide a steady income, they may not always keep pace with inflation. Over time, the purchasing power of your dividend income may decrease if the dividend growth does not match or exceed the rate of inflation. How to build a dividend investment portfolio. Research and select high-quality stocks. Start by researching companies with a strong track record of paying and increasing dividends. Look for companies with solid financials, sustainable payout ratios, and a history of stable earnings. Tools like the Dividend Aristocrats list can be a good starting point. Diversify your holdings. Diversification is key to managing risk in any investment strategy, including dividend investing. Spread your investments across various sectors and industries to reduce the impact of any single company or sector underperforming. Consider including a mix of Dividend Aristocrats, REITs, and high-yield stocks. Reinvest dividends. To maximize the benefits of compound interest, consider reinvesting your dividends. Many brokerage firms offer automatic dividend reinvestment plans, DRIPs, which allow you to reinvest your dividends to purchase additional shares without paying commissions. Quotes from great investors. To further inspire and guide you, here are a few timeless quotes from great investors on dividend investing. The beauty of dividends is that they represent a return of capital, not just a return on capital. John Bogle. In the 20th century, the stock market provided an average annual return of about 10% per year, of which dividends accounted for roughly half. Jeremy Siegel. Conclusion. Dividend investments can be a powerful tool for generating steady income and building long-term wealth. By carefully selecting high-quality dividend-paying stocks, diversifying your portfolio, and reinvesting your dividends, you can harness the benefits of this investment strategy while managing its risks. Whether you're a retiree looking for a reliable income stream or an investor seeking to grow your wealth, dividend investing offers a compelling approach. As Warren Buffett wisely said, in the long run, it's hard for a stock to earn a much better return than the business which underlies it earns. By focusing on strong, dividend-paying companies, you can align your investments with businesses that have a proven track record of success. If you found this video helpful, please like and subscribe for more insights on investing. Stay tuned for more tips and strategies to help you achieve your financial goals. And if you're eager to explore more about investing, make sure to browse through our other videos on this channel. Thanks for tuning in. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.